This month, our focus is on preparing financial reports and using those financial reports to determine the viability of your business moving forward. There's a number of reasons why this is important. Quite often, lenders, investors, or even government bodies might request financial statements, and they will assess your business in order to either invest funds, lend money, or provide government grants. So knowing the viability of your business beforehand via the financial reports helps you get ahead of the game and to make sure that whatever these particular parties might be looking at, that you're already well and truly across. The reports that we're going to focus on are going to be, firstly, the financial statements, being your profit and loss and balance sheet. Your profit and loss gives an indication as to the profitability of the business, in that it gives the income of the business less all associated expenses. And we use the key metrics within the business to help determine whether your business is performing ahead of its rival industry benchmarks or whether you're behind. And then what we do is we help a lot of businesses identify their weaknesses and show them how they can improve in areas around, say, your gross profit, your cost of goods, your wage percentages, identifying the areas that are underperforming and showing you how to turn those around. The balance sheet gives the financial strength of the business. There's an old saying about cash flow is king. And nothing could be surer. You could have a very profitable business, but it's all tied up in stock and in accounts receivable, and your cash flow might actually not be very strong, even though you've got quite a profitable business. And this will be reflected in your balance sheet. The balance sheet really does show the financial strength of the business. And also shows the debt and the leveraging and a whole host of other areas that lenders and investors and government bodies would be interested in. The second financial report will be your business plan. A business plan should detail your long-term goals, but also your short-term strategic goals that are going to help you hit your long-term goals. A lot of businesses that we've come across have no business plan. They just go from day to day. So having a well thought out and documented business plan is a really important step on helping you reach your goals in the future. The third reports we're going to focus on are going to be your budgets. So a good, strong business has budgeted profit and loss, budgeted balance sheet, budgeted cash flow that basically projects out your financial forecasts of your sales, of all your key metrics like your cost of goods, your wages, all your key expenses, and shows a projected profit for the year or for the forecast period, so that anyone looking at those forecasts is going to be able to see what you realistically think you're going to be able to achieve in the next 12 months. When you're dealing with banks and investors and government bodies, it's really important to them to be able to see that your next 12 months, 2 years are going to be strong financial years. And obviously it's just a projection, but the projections are really important in helping people from the outside see what you expect your business should be able to achieve. Finally, forecasting the cash flow of a business is probably the most important report that you might have in your arsenal. Obviously, it's good to be able to project your profit and loss, but how is your cash flow going to look? Is your cash flow going to be strong? Is it going to be weak? So forecasting your cash flow and planning around it accordingly will really help show that you've got a good, strong business that's able to repay any loans or pay dividends to investors. So these are the four key financial reports that we see that are the focus on anyone assessing the viability of your business. If you need help in preparing any of these statements, please get in touch, because we can obviously help with all of those issues.